Welcome YouTubeites, it's your boy Austin, and this week we've got more S&P earnings, interest rate hikes heard around the world, Indian fraud, and a big old Chinese weather balloon in the finance recap. So without any further ado, let's get to it. The Federal Reserve raised the Fed funds rate by 25 basis points this week to 4.58%, marking the 8th straight meeting with a rate hike. This is another slowdown from the 50 basis point increase we saw in December, which itself was preceded by 4 straight increases of 75 basis points. Federal Reserve Chair Jerome Powell acknowledged the progress made in reducing personal consumption expenditures, or PCI inflation, the Fed's preferred metric of inflation, which fell from a high of 6.8% year over year in June to 5% in December. The Fed did not update its forecast from December's estimated terminal rate required of 5 to 5.25%, but will update forecasts in March with more data. Fed Chair Powell gave no indication of a pause being in the books anytime soon, even when pressured about increasingly positive data related to inflation, indicating that at least 2 more rate hikes are required in the following 2 meetings to adequately tighten the financial environment to combat inflation, which is kind of like a big bear hug from your grandma. It's really tight, but it's meant with love. The Department of Labor reported Friday after the Fed meeting that the U.S. added 517,000 jobs against an expected 187,000, and unemployment fell to a record 3.4%. It's not all bad news, as hourly wages increased 4.4% year over year as compared to December's 4.8%. Current projections reflect a need for unemployment to rise to 4.7% to accomplish the Fed's 2% target of inflation. We'll have to see if the cooling wage environment can offset the still hot labor market, allowing the Fed to pivot policy without significant increase in unemployment. This week, Indian industrialist Gautam Adani went from being the 2nd richest man in the world to the 13th after short seller Hindenburg Research released a 1,000-page report alleging rampant fraud within the company he founded, the Adani Group. The report alleges stock price and earnings manipulation through undisclosed related parties, which have driven up the price of Adani companies by 819% in the last 3 years alone. This isn't the first time the Adani Group has faced such allegations. In 2007, there was a ruling by the Securities and Exchange Board of India related to stock price manipulation that ended in Adani Group companies being barred from participating in securities markets for 2 whole years. The 7 publicly listed companies in the Adani Group lost $110 billion in market cap since the release of the report, which is over half of their value. The group canceled a planned stock issuance of $2.5 billion on Wednesday due to the slide, and Mr. Adani has refuted the reports as a lie, all while confirming said entities were owned by his brother and are not related parties, which is actually contrary to what India's definition of related parties are. That's beside the point though. The Adani Group issued a 413-page report in response to the allegations. In the report, Mr. Adani is draped in patriotism, and they frame the allegations as an attack on India itself and its meteoric rise over the last decade, highlighting the role that Adani Group has played in the various areas. This week, we saw the largest wave of S&P 500 earnings reports, with half of the index's 500 companies having now shared results. Earnings and revenue beats have ticked up slightly since our last check-in, with 70% and 61% beating expectations respectively. However, the magnitude of these earnings beats has declined from the 1.5% reported last week to 0.6% above earnings expectations. This is driven by larger misses in the technology sector. Not to be outdone by Chevron's announcement last week, Exxon, the largest U.S. oil company, set its own record for profits, bringing in $55.7 billion. That's $10 billion higher than its previous best year in 2008. This is a stark turnaround from its first loss in over 40 years back in 2020 during the COVID-19 pandemic, when they lost $22 billion. On the other hand, tech giants Apple, Amazon, and Alphabet are now being coined AAA, and they have been anything but this earnings season. All missed earnings expectations, with only Amazon meeting revenue expectations. Amazon reported its first annual loss since 2014, losing $2.7 billion. This is primarily due to a $12.7 billion write-down on its investment in electric vehicle manufacturer Rivian. Apple and Alphabet had slower than expected revenue growth, but all 3 are anticipated to rebound in coming quarters. Facebook, or Meta, barely beat revenue estimates, bringing in $32.17 against an estimated $31.55 billion, and they missed on their earnings estimates by a mile, reporting $4.65 billion against an expected $6.02 billion. Despite this, the stock saw its best day since July 2013, increasing 23% on Thursday following the announcement of a $40 billion stock buyback program. The two major central banks in Europe, the European Central Bank and the Bank of England, both announced an increase to their interest rate of 50 basis points this week. The ECB has now raised rates 5 times in a row from negative 0.5% in July to 2.5%, all while signaling that there could be another 50 basis point increase in March. The Bank of England also raised rates 5 times, moving from 1.25% to 4%, the highest level since the housing crisis. Bank of England Governor Andrew Bailey has removed the word forcefully from the bank's latest statement when describing interest rate increases, suggesting that there may be less aggressive moves going forward, while his contemporary at the ECB, Christine Lagarde, spent a majority of her press conference discussing the energy markets and the need for EU governments to roll back energy support measures due to their inflationary nature. These measures were enacted last year when energy prices were significantly higher, and some continued throughout 2023. In a plot straight out of a spy movie, a Chinese balloon was spotted by civilians on a commercial airliner above Montana on Wednesday and took the nation by storm. The balloon, which was either a civilian aircraft or, let's be real, it's a spy balloon, was traveling through the jet stream at a height of over 40,000 feet, posing no threat to commercial air traffic or people on the ground, however inhibiting Phileas Fogg's trek around the world in 80 days. The balloon has caused a diplomatic stir, with Secretary of State Anthony Blinken postponing his trip to Beijing, which would have been the first such visit by a senior official in over 4 years. The balloon was ultimately downed off the South Carolina coast on Saturday morning, causing even more tensions between the two nations. China claims the balloon is a civilian aircraft used for atmospheric observation. However, this is not the first instance of such activity being noticed by the United States or other nations, and it's surely not to be the last. It raises many questions about China's intentions, and the fallout of this incident is still unclear, but it's safe to say if your equipment is loitering over someone else's airspace, then don't expect a warm welcome, and don't get mad if someone shoots it down. Hey YouTubeites, thanks for watching. Make sure to like, share, and subscribe, as well as commenting below on any topics you think that we should cover in the future. That's how we keep this show interesting for you.